third quarter results. Wilfred Frost joins us this morning with those numbers. Hey, Wilf.
Massive beat, Andrew. So revenue, $13.6 billion. The forecast was $11.7 billion. That is up 26% year over year, which is the exact same percentage year over year increase that Morgan Stanley had. Those two, the clear big winners from this quarter, along with Bank of America as well. The EPS bottom line, $14.9 per share. The forecast was for $10.1, so another big beat for them on that line. In individual parts of the business, investment banking is comfortably the factor that leads us. $3.7 billion in revenue. The forecast was for 2.9, so nearly a full billion ahead of forecast. And like the others, financial advisory, the M&A advisory part is what's really driving that beat. 1.7, the forecast was 1.1, though origination and also doing fairly well underneath that. In terms of their markets, their trading business, again, very strong on both lines. The equities at $3.1 billion. Forecast for 2.1 is almost a full billion ahead of expectation, though financing within that was a full billion. So we'll see how the analysts pick that apart. The fixed income trading also strong, 2.5. The forecast was for 2. Slight miss on asset management. 2.3 billion. The forecast was 2.6 billion. Similar theme there to Morgan Stanley as well yesterday. And last quarter is where Goldman had this extraordinary 5 billion revenue print in that particular line item. So that has come back down to earth as expected. A little bit behind forecast. Consumer and wealth management, a nice beat there. 2 billion. Forecast was for 1.8 billion. That bit is still growing and increasingly significant part of the business, though it is the investment banking line, Andrew, that really blew this out. Yep. Big beat on both lines, and the costs look kind of in line. So unsurprising to see it up 2%.
And I think the bond, I mean, the fact that the bond trading number was higher than people thought, because I think people were concerned about that, given that they have greater exposure in that front than some of the other banks. But big takeaway this week, now that we're on a Friday. You've had a big week, Wilf.
Big takeaway is still capital markets is the gift that keeps on giving. 7 or 8 quarters now where it's just been stunningly high numbers, and a different part each quarter picks up the slack. This quarter it's clearly M&A advisory. A few quarters ago it was fixed income trading, as you said. Goldman doing well to still do well in that environment, even though it wasn't the key part of the quarter. And yeah, Bank of America. We'll see if the other banks all do what they did yesterday and start delivering that operating leverage if rates do rise.